All right, Steve, you know all about these retail sales reports. You know, you're the former CEO of AutoZone, of Office Depot. I want to get your impression on what the real meaning of this is. It's supposed to tick up a bit. How meaningful is this? How insightful is this really about the consumer in your mind?
Well, it's supposed to tick up a bit for the month, but if you look at it for the third quarter, and that's why this later morning report is so important, the quarter is supposed to be up right around 4.8%. And even if you back out inflation, it's still projected to be up about 3.5%. That's very stout, particularly since the NRF has reported that back to school sales were actually down. So this is really strong base consumer spending. Very important, as we know, because 70% of our GDP is made up by the consumer spending. And as we look at the trajectory of the economy, everybody's been sitting on pins and needles waiting for this thing to land. This is what a soft landing looks like. The consumer is still holding up. They still have dry powder here. Wages are still strong. Real wages are up now, and jobs are plentiful. So we're sitting in a very good situation going into the holidays, and that's what everybody was worried about because the holidays are so important to the total year. This looks like it's going to be the nadir of our GDP in the fourth quarter.
Steve, you got to be excited. You're pulling out some SAT words on us. The nadir of the third quarter, man.
It's just two syllables, Frank. It's two syllables. Okay.
Let me talk to you about the other side of the coin, how the Fed is going to read this. So obviously the Fed looks at inflation and labor. Those are their two, dual mandates. That's the most important stuff. But they obviously look at this as well. Is there any concern in your mind when it comes to CEOs that this strong retail sales report might actually lead to a pause coming up in November? We talked to a lot of CEOs. They're really looking to see those rate cuts continue to make decisions on spending, on CapEx, et cetera. Could this actually, even though it's a strong retail sales report, lead a lot of CEOs to say, hey, maybe I need to hold back because some of those rate cuts might take longer than I previously expected?
Short answer is no. We think it's okay. This is what the Fed's been looking for. They're trying to get inflation down to 2%. They're trying to keep growth at 2%. Those are the magical numbers here. We have inflation heading in that direction. We're sitting at around 2.5%. Consumer still strong. Usually what happens in these situations is it triggers a recession. And when that happens, you see massive job losses. That's not happening this time. And so this is what I said before. This is what a soft landing looks like. We have not seen one in decades, maybe once or twice before in history. So we're not used to this, but this is great. And so I think the Fed will continue to cut probably a quarter point here in November. I don't think they're in a rush because they'd like to see it settle more, but we ought to see rates come down by another point and a quarter by the end of next year, and we'll be back to normal.
So, Steve, we're almost out of time. I wanted to ask you just very quickly, any concern that while we're seeing these retail sales numbers, tick up a bit, that it's with a very stretched consumer and that after the holidays that the consumer might actually be tapped out? I know everybody's saying the consumer is strong, but we do have to admit a lot of this spending is on credit.
It is on credit, and we're at record highs on consumer credit, but there still seems to be some dry powder. Again, it comes back to jobs and wages. If people have their job, if their wages seem secure, which is the case because CEOs are really job banking here, they're not going to layoffs, then they feel pretty good about spending. But I think you're going to see a natural pullback a little bit in consumer spending in the first quarter post holidays, but we'll see.